COSM showing us some of that red that we do not like to see. Let's go ahead and validate what could be happening for the following sessions. What is up, you guys? Thank you so much for stopping by on this happy Saturday. This is ARCa coming at you with the COSM technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay. So yes, of course, we got this really crazy red candle here. So I'm going to go ahead and provide some perspective here. There are a couple possibilities, okay? First of all, I'm not saying that this is the bottom just yet because momentum is actually suggesting a little bit of a further downside even still. But if this is the bottom here, then we could possibly be building right angled triangle or a descending triangle, right? So this does have a mathematical back and also a psychological back to it. Okay, but since momentum is still suggesting some further downside, that leads me to believe that there are a few possibilities of which we need to touch on the following chart. Okay, so in this chart, following this is the statistical side where we're looking at volatility versus momentum, right? So we drew a range that we could potentially be riding in, right? So this was that same range that we've been talking about for a few days now, and it looks like we came very close to that bottom, which the bottom is actually just happens to be that the triangle bottom. Okay, so in this case, what I'm actually talking about is if we do have some more downside left, then there are a few possibilities of which we need to be aware of. Okay, so first of all, I'm not quite convinced yet on the fact that I possibly have found a descending channel, which a descending channel is actually a bullish formation all on its own. Actually, this would be a reversal signal of the trend, right? So of course, upon the breakout out of this channel, we actually haven't gotten the test back to confirm or validate the newly converted resistance, what was as a resistance, into now a support. Okay, so it doesn't have to happen every time. In fact, there are several examples that I have that where we actually came close to it and then continued on to the upside. So particular to the daily time frame, we actually do have a gap located here that we already filled, of course, but sometimes these gaps can be used in the future as a form of support. So we're looking at a daily here. Okay, so if we were to come back and test that support, then it would essentially drop us to about 476 to about 495, and a possible flash wick down to that supposed top of the channel. The reason why I'm not quite certain is because there are several touch points or several contact points along these candles here, but then also the top candle that we faced, $23 iteration here, it connects pretty well to a few other candles too. So I have two areas, right? And now the top area of the channel in particular does have it does share some correlation with the gap, right, that we have on the daily gap formed from January 5th to January 6th. Okay, so if that is the case, then it could be facing some support here before a bounce. All right, and now I want to focus on what happened before the massive run up that we had, right, to that $23 or what was called I think it was 88 cents. Possibly, right? So what it was pre-split. So I want to talk about this area here. Okay, so please remember that when we were talking about potentially moving to the upside, we made that cross of the volatility component versus the moving average towards the upside, right? So remember, volatility is direction neutral. So we made that important cross, and then we launched to the upside alongside momentum following that upside move too. So we also noticed it in the iteration that we just had here, just like the same way that it happened just prior to the event, right? So we noticed the cross, we got the cross, and then we moved really fast to the upside, right? So upon that move to the upside, we actually did get kind of a break here. Okay, so what I want to touch on is the fact that that break was a minus about a 35.84% drop from this iteration here. So from the top of this formation, we actually came right back down to this was a flash wick, so we don't really count that, right? So we came down to this lower point, which was about a minus 35.84% drop. So what's interesting to me, what's very interesting, is that upon studying the chart, I actually compared the high, right? So it would be the high from this candle here to the low of the gap that we're looking at. It actually happens to be right at that 35% zone, which is very curious. So this is now giving me a little more correlation. So and in fact, it's giving us that correlation. Let's just go ahead and move it just a little bit, right? So we can see just how. I just want to make sure that that line is actually at the wick high here, right? So it is. So it's dropping us right to that bottom side of the gap right here, which just so happens to be very near this channel top. Okay, so if we were to take a fib retracement from the prior day's swing high to swing low, Thursday, right? So we can actually see if we have some confluence here too. Okay, so all right, so we're gonna do it from this one as well, but the 2.272 is a very important target, so that's actually taking us right to the channel. So that's curious already. Okay, the other curious thing is that, I mean, I wouldn't like to actually, no, it's not. Yeah, the 2.272 would actually land right at the channel top. So now let's take another fib and see if the fib would actually correlate deeper by taking the swing high to the swing low of the current day, of Friday's price action, right? So let's go ahead and do that now and see what we get. Okay, so here we go. Okay, so the 2.272 is still in direct relevance here, so even more correlation right now. In fact, actually, the 2.618, which if you see how the cursor notches per candle as I move left and right. Okay, so if we move one iteration right, this would essentially be the next day's iteration, right? So if we take the cursor down and line it up with the 2.618 from this area here, you can actually see that that would be right at the channel top too. Okay, so this is actually giving me a total range of about 495 to about 451 before us finding a bounce. Okay, so this is the correlation is what we're looking for, right? The harmony or the rhyming of it. So if we can just go ahead and draw this new range of support, then we could essentially be looking for a pretty nice bounce from this area here, thus validating the newly converted resistance into support of the descending channel. Okay, so further validations are needed, of course, but this is what I'm looking at based on raw price action. So let's go ahead and validate that downside. So RSI in the immediate short-term time frame, 30-minute, is showing already a downside. Okay, so is the buy hourly, and so is the, let's see, the 6 hour. The daily actually looks like it's making a little bit of a bearish cross right here. It looks like it's losing a little bit of steam from the bears though. So, and here's kind of that confirmation that we may actually be losing sell pressure, right? So starting from the buy daily to the 3-day, you can actually see that this is no longer a strong pivot towards that downside, right? So we can actually face support from that 14-day simple. We're already very close to that gravitational zone, which would essentially pull us right back up. Same thing with the daily. We actually come back down just a little bit, right, to that 14-day simple, face the support from not only that 14-day simple moving average, but also from the gravitational zone, and continue our ascent, just like we did here, right? So just like that, right? So another thing I want to talk to you about is actually the fact that we only have, I'm sure you remember the last time when I was talking about the drives of divergence, where I couldn't keep track of the amount of drives of bullish divergence that we were accumulating, right? So I tried my best to look for the bears divergence right here, and I actually only found one. So I actually found one drive of phantom hidden bearish divergence. Okay, and that happens when price action is making a series of lower highs and momentum is making a series of higher highs. So divergence is actually the opposition of price action versus momentum. And in this case, momentum represented by RSI, the relative strength index. Okay, so that's how I'm actually getting that downside confirmation, right? So another thing here is that we actually got a bearish print on the ARC DBSI, which is a Crypstex indicator. If you're interested, by the way, in acquiring these indicators, please send me a DM and we'll go over the subscription packages, which would allow you to have access to ARC Edge trades in Discord, where I share my exact parameters for the trade, right? So we did get a bearish signal here on Monday, January 30th, and it's starting to show some of that weakness right now. But the interesting thing here is that yes, we do have a bearish drive, right? And we have also all of the other time frame RSIs suggesting some downside to a certain extent. We already saw that there's a point to where it looks like it's losing strength around maybe a couple days, maybe a few days, right? So, but the interesting thing here is that DBSI is still giving us a bull strength of leading at 63% over the bears at 37%, which is also curious. So this is in line with what's happening with losing bear strength. So, and it's also leading me to kind of voice out loud that this may be a temporary pullback. And it also has a lot to do with the confirmation of the channel top as a support, right? Or a validation of the support. And still validating this area of support, 451 to about 495. So I'm just the messenger here, right? I'm expressing what the charts are saying, and I think that this is the correlation that we're actually looking for. Okay, you guys, please remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence, and everything would be just fine. If you would like to compare charts or create your drawings, then go ahead and refer to the link in the description below for the TradingView software affiliate link. That would help me greatly in my trading future if you did sign up for an account. And that way you can actually make some similar drawings and maybe express your point of view, as many others are actually already doing, which I'm very grateful for. All right, you guys, but that's going to do it for this video here. I'm not actually bearish on this. It's per the playbook rules that we have to come back and test these supports, right? So it's just, again, part of the natural ebb and flow of the markets, right? So we have to kind of keep that in mind and understand that we do have to protect our longs and make sure to absolutely abide by our risk management. Okay, you guys, but with that said, I wish you well, a great rest of your weekend, and I will catch you at the bell on Monday. Adios.